Okay, hello everybody. Welcome to Connect Fintech, the pitch competition that brings together leading members of the media with exciting startups innovating in financial technology. My name's Jim Glade and I'm a partner at Publicize, a PR firm for growth. And I'm joined today by my colleague Bianca Damiano, who helped organize today's event alongside Salome Muriel. We're really pleased to be joined by a host of leading journalists who report in the fields of startups, technology, business, and financial technology. And we're equally happy to host 5 very exciting startups offering innovative fintech solutions across multiple industries, and they'll be pitching their ventures in front of these distinguished media judges. We'll also be holding a question and answer period live after the pitch competition. So any attendees or startups that are presenting today, it's a great time to ask questions of the media and get feedback about best media practices, what makes stories newsworthy, and that sort of thing. So we'll take some time for that as well at the end. Before we begin, I just wanted to mention if any startups that are listening have any questions regarding PR, feel free to reach out to me at jim@publicize.co. So now, without any further ado, we'll go ahead and we'll meet our media judges. And judges, please feel free to unmute, say hello, so we can put a face to the bio as well. First up, returning for another Connect event, we're very pleased to have Janae Thier, who is the Senior Data Editor at Crunchbase News, a leading publication covering the venture capital and startup space. Janae conducts strategic research to explore and report on trends within private company data and focuses in particular on global venture funding trends, fintech, and gender equity in VC and tech. Her work has been featured in TechCrunch, and she's also been invited to speak at leading technology events, including Slush, Startup Grind, Founder Institute, and a whole host more. Janae, thank you so much for joining us today.
Hi, good to meet you all, and I'm hailing from Palo Alto today in Silicon Valley.
Thank you so much. Next up, we have Layla Maiden, who is a correspondent covering investing for Business Insider, one of the leading financial and business news publications in the United States. She reports on stocks, commodities, cryptocurrencies, and profiles successful stock traders and fund managers. She's also the host of Block Street, a Business Insider interview series about the crossroads between new and traditional markets. Before making her move to journalism, Layla also worked for the United Nations Office for Disarmament Affairs. We're really always pleased to have Layla with us. Thank you, Layla.
Oh, I'm supposed to unmute. Hello, everyone.
Hi, Layla. It's good to see you. Next up, also returning, and we're happy to have him, is Mark Gilman, who's the editor of Benzinga. Mark Gilman is an award-winning journalist and broadcaster and is now an editor and feature reporter for Benzinga.com, which is a financial news and analysis service for investors. Mark got his first start as a journalist in the US Navy and became a broadcast journalist in TV and radio based in Washington, D.C. Mark joined Benzinga in 2020 and has covered news from clinical trials to technology and finance, as well as commercial real estate investing. And now he's called before from Guatemala, but he's now based in Detroit. So Mark, it's a pleasure to have you with us again.
Yeah, good to be here. Thanks.
It's good to have you. Next up, for our first time on a Connect event, we're really pleased to host her. We have Tanya Andreasen, who is the editor-in-chief of Fintech Futures, a leading global provider of independent intelligence and insight for professionals in the fintech sector. Tanya oversees the publication's digital and print publishing operations and strategy. She has extensive understanding and knowledge of the banking, financial services, technology, and other industries, and as well as its participants, including all of the vendors, financial institutions, consultants, and other third parties in a global, regional, and domestic level. She specializes in covering banking tech, fintech, and pay tech markets. So couldn't be better to have her as a judge today. Tanya, thanks for being here with us.
Thank you very much for inviting me, and I'm very happy to be here. Looking forward to what the startups have to say. And I'm joining from the UK, so that's why I'm lurking a bit in the shadows, because it's the end of day here and it's getting really dark.
Oh, well, thank you so much for staying up late for us. We appreciate it, Tanya. Next up, also on that side of the pond, we have Stefano De Marzo. He's an accomplished editor and writer with extensive experience in the media industry, and he's currently based in Barcelona, Spain. He's contributed to several publications like Sifted, which is a publication from the Financial Times that covers technology, Forbes, Entrepreneur Magazine, the European correspondent, El Nacional in Venezuela, and Gestión, which is the largest publication in his home country of Peru. Right now, he's currently the editor for Novo Brief, the leading English language publication covering the Spanish startup ecosystem. And he writes and edits articles about venture capital, financing round, new products, and everything surrounding the startup ecosystem in Spain. It's always a pleasure to host you as well. Thanks very much, Stefano.
Thank you, Jim. Happy to be here.
It's good to have you, sir. And last but not least, we have Maria Delgado, who is a contributing writer at Hacker Noon, a leading US media outlet for technology enthusiasts and professionals. She's actually based between Medellin, Colombia and Miami. And Maria has also contributed to large publications in Spanish, such as Forbes, Centro America, and Entrepreneur Magazine. She's also the vice president at Publicize. So Maria, thank you so much for being here with us.
Thank you so much for having me. Very excited.
It's good to have you back. Well, again, I just want to say thanks to all of our media judges for taking time out of their day to provide their insights. It really is appreciated. So thank you very much. We'll go ahead and start the pitch competition. Startups, I'm going to bring you on stage in the presenter role. You'll go ahead and share your screens and pitch for 2 minutes. I will be timing you. After that, we'll open up for some questions and feedback from the journalists as well. So first up to start us off today, we have Daniel Garzon from Creditop. Daniel, give me 1 second and I'll pass you the presenter role, sir.
Sure.
All righty. You should be able to share your screen now if you want to give it a try.
Yeah, I can. Can you see my screen?
Fantastic. Yeah, we can see your screen and hear you loud and clear. So Daniel, whenever you're ready, please start the pitch.
Okay, perfect. Thanks. Hey everyone, my name is Daniel Garzon. I'm the co-founder and CEO of Creditop. And I would like to start by sharing my story. 2 years ago, I had a really bad experience trying to get a loan. Basically, I had to visit like 7 different banks trying to compare the credit conditions and the interest rates. And at the end, I couldn't determine what was the best loan option for me. Like me, 300 million Latin Americans struggle to get a loan because they don't choose the right lender according to their financial profile. Basically, as a consequence, they are missing out on financing opportunities, and also they are overpaying up to 70% on interest expenses. On the other hand, lenders is lending up to 150 billion per year because they are not in the right time and place for their clients. That's why we started. Basically, Creditop is a credit aggregator that processes any loan request by centralizing lenders and connecting customers with their ideal loans. We started 18 months ago as a credit marketplace. Basically, we already validate the solution in each type of loan: mortgage, car loan, personal loans, and credit cards. We already disbursed more than $10 million through 11 lenders, charging them between 1 to 4% over each credit disbursement. Our next step as a credit aggregator is a loan button. Basically, we are centralizing all the lenders, and we will become this loan button in a loan checkout service and to allow merchants to sell by credit in their point of sales or marketplaces, all in real time. Yeah, the idea is that you can pay with a loan, not only with your credit card. With this, you can reduce the cost of your debt here in Latin America. With this strategy, we will 10x our current business in the next 18 months, consolidating 100 millions in disbursements, 500 merchants, and around 25 lenders. We are creating a new payment solution. So from now on, every time you buy something, ask yourself, should I pay with card, cash, or credit card? Thanks.
Very interesting. Thank you so much, Daniel, for that great presentation. We'll go ahead and we'll open up any questions for the media. Leila, please.
Just a quick question about the percentages that your company takes. Is that taken from the company directly and there's no impact at all on the end user? And in other words, if someone's taking a loan from one company through your platform, the rates that they get would be exactly the same as if they went to the primary provider? I don't know if that question made sense.
Well, I don't get your the point. Sorry.
The interest rates or the percentages that your platform takes, are they in any way reflected or trickle back to the person who's taking on the debt, the customer?
Yeah, we're just like a channel, and you can see the entire information of the loan that you're applying to. Yeah, so you can see the interest rates and all the credit conditions when you are selecting the loan. And yeah, basically, we're providing all the technology where we can determine if you're able, which lenders could apply for you according to your financial profile, and also the interest rate.
Did that answer, Leila?
I think somewhat.
Okay, for sure. It sounds like maybe the question was, is there does Creditop take a percentage as well? And does that transferred on to the person that takes the loan? No.
No, yeah, we don't.
Okay.
You mean it like a spread of the interest rate?
I think that's where.
In other words, the company you're linked to, right? You're taking a fee from that company directly. Are they taking on the costs entirely themselves, or is there any adjusted rate that they pass over to the customer? Like, for example, when you use a company like a Grubhub or like a food company that delivers your food, you look at the prices, but those prices that you're looking at are different from the prices of the same food that you would get when you walk directly into the store.
Perfect. No, the answer is no. It's exactly the same interest rate or price at when you go directly to the bank.
Awesome. Thank you, Daniel, for clarifying that one. Great question as well, Leila. Tanya, I see your hand up if you wanted to go.
Yes, so thank you. I was going to follow up on that question. So basically, you make money as a business from the lenders that are included in your marketplace. Is that correct?
Yeah, we get a fee from 1% to 4% over the total amount of the disbursement. Yeah, cool. And also we are applying a 1% fee for the merchant.
Okay, and my next question is, what is the competition like for the marketplace such as yourself? For example, here in the UK, there are lots of comparison sites and sites like yours already, but what about where you are? What's the competitive landscape like?
Yeah, basically when we started, the main reference was Credit Karma. Yeah, it's not it's just this big platform, which is in the UK and in the United States. But we discovered that we could hit the challenge of the acquisition cost and the brand through the merchants. That's why we're in this next step. But in terms of the marketplace in the region, we have three main players: Compara Bien, Compara Online, y Compara Mejor. They are basically comparison tools, but they are not processing the credit request. We are doing that.
I thought you were about to do it. I haven't realized you're already processing it.
Yeah, we're processing the credit. Yeah.
So thank you, Tanya. I see Janae, if you want to go ahead.
Yes, Daniel. So I'd love to understand what is the customer base that you're targeting, or the use case that you're targeting that you think would use Creditop the most, or the kinds of customers that you're trying to get.
Okay. Yeah, basically when we started with mortgages. Yeah, so the segment is really different, and we discovered that we need employees at the moment, and we are discovering a new segment of people that they are not used to apply for loans because they think that they don't have the access. So basically now we are centralizing banks, fintechs, like financial companies, because we are like increasing the amount and the opportunity of having a loan here in the region. Because yeah, when you are like a user and you go to your bank and they say no, you can't have this loan, what you think is immediately is like, if this bank, which is my bank, are not lending me, no one is going to believe in me. But now we are just like creating new opportunities in terms of this lending field.
Alrighty. I hope that answered your question as well, Janine.
Yeah, that did.
All right, perfect. Well, Daniel, thank you so much for going first, and a great presentation as well. It's never easy, but I think you did a great job. So thank you very much, Daniel.
Thank you. Thanks.
All right, guys. Daniel at Credit Top. We'll go next to Fabian from Bunny Money. Fabian, give me 1 second. I love the name of your startup, by the way. Let me pass this.
Thank you.
Let me pass the roll to you. You should be able to share your screen now. No such luck. Let me try again. Oh yeah, you should now. Let me know. There you go.
Hi everyone, I'm Fabien, CEO of Bunny Money, the impact finance platform for employees and businesses. Employees want their company to make a positive impact in the world we live in. But only a few do it, and that's too bad, because impact also means a more productive and engaged workforce. This costs businesses 15% on each payroll. Well, that's where we come in. We build the app that the employees wanted. For example, they can save with T-bills, they can invest with climate bonds, and they can also make donations to the causes they care about. Now, if they enter their work email, they can find financial products and matching gift programs offered by their companies. And so companies too can make impact investing and corporate donations, but we also help them to engage their employees with purpose. They can seed the wallets of their employees with some money to use for impact, and they can configure matching gift programs. So nonprofits too connect to the platform and can fundraise for free. They can refer their members, volunteers, and find new donors. In fact, everyone can open an account and make referrals. Unlike others, we let individuals, nonprofits, and businesses directly transact and without any fees, which amplifies the impact. We charge businesses a fees based on active employees. We can also earn money on shared interest on all the deposits that flow into the platform. We are a B Corp and diverse team. We have experience in banking, sustainability, and we scaled SaaS products in the past. We launched our B2C app last year, and we are about to launch our business offering. Thank you.
Fabian, great presentation, and under time as well, which is always appreciated. We'll go ahead and we'll open up. Any questions from the media of judges? I think I might have saw Tanya and then Layla go up first. So Tanya, we want to go ahead?
Sure. What's in the name? Why Bunny Money?
Yeah, good question. Originally, we really wanted to disrupt the piggy bank and went for Bunny Bank, more like an agile rabbit that wants to make to set aside an impact without making too much effort. To use bank on our name, we actually need a charter. So we start with a simple app, Benny Money, until we get to be a proper bank maybe one day.
Let's see here. Leila, I saw your hand up, but if you,
Yeah, just
yeah,
a
go
quick
ahead.
question. I guess this is an international platform. Do I get a tax document return for, say, the country I'm in and the required tax document in case I want to file that?
Yeah, that's a good question. We actually start in the US. So for now, we are US only for the nonprofits and businesses. We do provide the tax receipts. We also do the year-end tax report of all your donations, which is very convenient to prepare the tax return.
So is that because each company is like a 503c or is it your platform has the license to grant that for the IRS? So it doesn't matter who fundraises through your platform, you can give them that tax document, or where does it come from?
We verify the nonprofits that are listed on our platform. We do a vetting, like using like nonprofits directories and impact check, and also a KYB, verifying their banking abilities to collect donations, and provide the receipts to the customers and the businesses that give to the nonprofits.
So thanks, Fabian. We'll go with Mark, Stefano, then Maria.
Do you determine the nonprofits that participate, or do the users get to pick their own?
We actually make a selection of we have about like 15 nonprofits now on the platform. So we vet them and verify them. What we try to do is to offer them like a little bit everywhere in the US and across different causes as well.
How do you go about choosing them?
Really like using, different criteria on like local and causes, and then verifying a little bit the impact. We also have a partner that can verify the impact on the field. And so we try to leverage that to make educated choices.
Okay. Stefano, please go ahead.
Hi, Fabian. I'm curious about how has been Bunny Money's experience so far. Can you talk about a little bit about a specific case study?
You said about the screen?
A specific case study.
So we launched last year with like our B2C app, and so we have people really using it to set aside automatically some money, build up some savings. They are earning 3% APY, and also make donations to causes they care about. What's nice is that we have seen like customers like just starting with the savings, and then to start later on, like a couple of months later, to make donations, which we think is very positive as a virtual circle. We also see a lot of nonprofit staff members actually using the app, and that confirms that 84% of volunteers also donate where they volunteer, and even more the second year. And so we see that on the app, which is also nice to see the nonprofit also using it with their members. Now
okay.
we are.
I was thinking more about like specific campaigns that happened, and Bunny Money was helping the funding of these campaigns.
What we promote is really a recurring savings and donations, and a little bit based on what you can afford. We also, like, our research show that people don't really know how much to save or how much to donate, and that's really our starting point. And so it's more like ongoing. We are not like a campaign-based type of tool. It's more almost like financial planning, including impact investing, savings, and also donations as part of that.
All right, thank you, Fabian. Maria, I saw your hand up, but maybe your question was answered.
It was answered by, I think Mark made the question that that I've been curious about, but you raised another question actually. So how do you, because you're saying that not many of the users know how to invest, right? So how do you go about teaching them, or is there any like guidance, or how do you go about so that they save and then invest in the correctly, or how you wish to?
We are working on a few things, but one of them is to really look also at their lifestyle and what could make sense for them based on their bank transactions. matchmaking for the nonprofit, the causes, but we are thinking the same for impact investing and the blue bonds, green bonds that we could offer them, surface them, so help them to make educated choices with some content, but also based on their own lifestyle, what could be maybe relevant for them to support. And I think that's a very interesting area to where we can use AI.
Thank you.
Well, very cool, Fabian, on what you guys have built. So congratulations and thanks for joining us today and presenting as well.
Thank you.
All right, folks. We'll move on to our next founder. We have David from Goen. David, give me 1 second and I will pass you the presenter role.
Like, first of all, like, sorry that there is a lot of monkeys here. Like, I'm in Costa Rica and you will hear monkeys and birds that, like, and one monkey stole my AirPods yesterday. Then it's true story. And then I'm here without AirPods. Yeah.
Hey, I've seen people use cute dogs in order to sway the judges before, but if you get a monkey on screen, that will be something else, David.
We will try it. Please come here. Okay, nice. Can you see my screen?
Yes, sir. Whenever you're ready, you can begin and I'll start the timer.
Perfect. I start. Hello all. Like, I'm David, the founder of Going. Mainly, what we have seen 5 years ago is like that there were a lot of neobanks popping up, but after 5 years, after like Revolut and 26 started, like only 9% of the banking European population use a neobank as a main bank. It means almost nobody. Why? Like, first of all, it's because, like, there is a lot of friction to change your bank, start using a new card, change your salary, bills, everything. People, like, normally when they are kids, like your father or whatever sets up in a bank and you don't change in your life. And what happens, like, mainly when these neobanks were created, they started like fragmenting more and more the market. Because, like, you have one promotion if you use one card, then if you have a certain bank, you have some APY, like everything is super fragmented. Then last thing, it's like money, it's meant to be spent. Like, people don't want money to die with it. Like money, like, mainly it's used to buy things, no matter if it's now or if it's in a near future. This is when we said, okay, why not creating a cross-banking solution that works on top of any bank? And mainly with Going, like, you can connect like almost any European bank to our solution and start accessing like the best tools of the best neobanks or whatever of worldwide, but without changing from your main bank and keeping using like your card from your main bank. Like, mainly Going, it's a solution that connects like whatever are your finances with whatever are your goals. And we split it in 2 ways. Like, mainly, first of all, you connect your bank and you can start accessing like automatic saving tools, investment tools, peer-to-peer transfers, budgeting, and a lot of different tools. And whenever you have enough money, like inside the platform, you can use this money in order to buy smarter. We are connected with more than 1,000 brands in Europe, like Uber, Starbucks, and some of the biggest ones of Europe. And mainly, like, whenever you want, like, you can spend the money that you have, like, inside through us in a really, really simple way. Like, we have launched this product 5 years ago, and we have achieved to be kind of big in Europe, and also we are in other 13 European countries. And this is easy because, like, mainly we don't consider ourselves as a bank. That's why we believe that finance sucks, and having a solution that helps you achieve your goals doesn't suck at all. We have more than 1 million downloads, more than almost 700,000 users. We have transacted through our platform almost 500 million. Like, the business model, it's clear. Like, the cool thing is that we have had this year we will close with more or less 5 million of revenues. The solution scales, and we earn money from different kind of all the different solutions that we offer in our marketplace. We have just opened yesterday like our Chrome extension. Like, then we have everything in app and also like in web. And some of the most important investors worldwide, as for example, our main investor, it's Javier Olivan, the CEO of Facebook, of Meta. And for example, I'm here in Costa Rica with Jack Dorsey now because like we are trying to become a global solution. Nowadays we're only in Europe, and I hope that soon we will be worldwide. And that's going. Thank you so much.
Right, David. Great presentation and really cool what you've built so far. So congratulations, sir. I'm sure there's going to be a lot of questions from the panelists. So we'll start off with Janae, and then we'll go to Tanya and Leila. Janae, please go ahead.
Sure. What I'd love to understand is what is the primary use case of users that come and sign up for the service?
Amazing. Yes, mainly the biggest use case at this moment, it's like everything regarding cashbacks, because like the cool thing that it's something that exists a little bit in America, but not yet in Europe at all. It's that with Going, like you can connect any bank in Europe to our solution. And mainly when you swipe your card in a commerce, like for example, you spend with your card from BBVA in Uber, and automatically we detect the banking transaction and we give you back, in that case, a 7.5% cashback, for example. And the cool thing is that all these tools that we are including in our solution, there are not new tools. There are tools that already exist in traditional banks or neobanks. But the thing is like neobanks has been super greedy, and they wanted to have the users in their main bank start using their card, having their salary in their bank. And our approach, it was, no, keep using your bank. Like you connect through open banking to our solution, and you can start using any tool of any bank, but without switching from your main bank.
Righty, Tanya and then Leila.
Yes, sure. So I have a couple of questions. First one is, how do you make money?
Yeah, it's in the slide, but of course it's like super fragmented. Like mainly our biggest business model at this moment, it's like instant withdrawals. Like you can withdraw money at any moment from our platform, but it lasts between 24 and 72 hours. And if you want to do it instantly, we charge you a 1% with a minimum of 99 cents and a maximum of €2.99. And this is kind of huge because we have a lot of daily volume. As you have seen, we have more than 700,000 users. Then this is kind of a lot of money flowing in a daily basis. And then also like we have a cut of all the merchants. For example, when we have a cashback to our users, we have a cut of a 20%. It means if the commerce gives us a 10% cashback, 8% is for the user and 2% is for us. And this is like also kind of big. And then we are just launching a premium business model, like a premium subscription that you pay $1.99 per month. And the rest of the revenues come from management fees from investment that you can invest in a high yield account or in more than 40 different cryptocurrencies. And this all together, this year has made us almost 3 million of revenue, and we will close this year at minimum at 5 million of revenue.
Yeah, the revenue, I mean, that sounds good, but usually the profit margins, that's where it comes unstuck, right? Because PFM apps are all notoriously quite expensive to acquire the users, to keep the users, to maintain the users. So am I correct to understand that you guys have a card that then collects all the other cards? No, because when the cashback happens, for example, where does that cashback go? Does it go to the original account where the money was taken from?
No, yeah, like the user keeps using the card of their bank, like whatever is the card of your bank. And like, and all this money, it's like the money that comes back goes into a virtual wallet that it's like held by us, that it's like the Going virtual wallet that at any moment you can use to spend in more than 1,000 brands, or you can withdraw to your bank directly. Then it's your money, you can do whatever you want. But like, you know, we manage like millions of euros in our wallets at this moment. Like we transact more than 1 million euros per day. And we have a float of around 30 million euros that it's like always there of our users, but users like mainly use their money however they want.
Okay, thank you.
Maria, go ahead, and then Mark.
Yeah, so you mentioned that you're looking to scale globally. Is there any particular region that you're looking to target first? I see you're in Latin America. Is this something that you're pursuing and then reaching to greater regions, or what is your plan for expansion?
Yes, like mainly our idea after Europe is to open like Latin America, because like in Spain, nowadays we are the biggest independent fintech of Spain about volume. And mainly like we are pretty powerful about like financial education and everything regarding that in Spanish. That's why like Latin America, we believe that it's a core market for us. And in Europe, we have license to operate in the 27 countries of the European Union, but in Latin America, we don't have any license yet or whatever. That's why like we are exploring here like how to become a global solution first, starting in South America, as you have said.
So, Mark, if you want to go ahead. I think you're on mute, sir. Hey, Mark, you're muted, just as a heads up, sir.
So who is your typical customer? What's the demo of that person?
This is a good question, because like it was difficult to find. At the beginning, we didn't know if it was more men, women, like young people, whatever. Like at the beginning, it was an average of 18 years old people because like we were good about attracting this kind of users. But little by little, after like 5 years that we have been in the market for 5 years, and we realized that like the age, the gender, whatever, it's not important. The important thing is the average salary. Our user has an average salary of 1,200 euros, and is this kind of user that, you know, it's difficult, like can live more or less well, but if they don't have this kind of tools that help them on their day-to-day, they can go on vacations or buy a new phone or this kind of stuff. And that's why like this is very interesting, because like mainly now in a possible recession, these kind of tools that help users like improve their lifestyle, mainly this in the past, it was a kind of commodity. And now that nowadays with a recession, this will be a must in the population. Like if not, people don't last to the end of the month. And this is like the kind of user that we are targeting and the one that is using us.
And one other quick question is someone who lost a considerable amount of money through the collapse of BlockFi. What kind of backup do you have? How do I know you're not going to fail?
Like as we use like an e-money license, like mainly we need to have like cash coefficient equal to 1. It means like we can leverage ourselves, we can invest the money. It means that if our user has 25 million, we need to have 25 million in our accounts. Then like we don't have the problems of other solutions that can play with leverage. That in the future, of course, we want to have the full banking license and do this kind of stuff in a good way, but we are not able right now.
David, really quickly, I think that answered a question I had, but I just wanted to be clear. So with the money that's held in the digital wallets of the customers, that money isn't like you don't do anything right now like a traditional bank where you might reinvest it or anything. That's just there.
Correct. Like the user can invest it, but he should invest it. Like we are not able to invest it in their name. Yeah.
Gotcha. Understood.
Yeah.
Thanks, David. Stefano, one last question we have time for.
Yeah, I had a similar question. It was, what are Goin's liabilities regarding the investments in cryptocurrencies? I mean, is there any risk in making your money grow with these cryptocurrencies with Goin?
No, there is not any risk. Well, like there is risk of losing it, but it's a risk of the user in that case, because like mainly is the user that select if they want to transform this money from fiat, from euro in that case, into like more than 40 different cryptocurrencies. And we do it through a third-party regulated exchange, in this case Bitstamp, that is regulated in Luxembourg, and mainly like we do everything in a compliant way, and the user has access at any moment to their money, and like mainly that's it. Like it's pretty straightforward, and the user it can only buy or sell. It's like our solution is built for the masses. It's not like an exchange, a pro exchange or anything like that.
All right, David, super interesting what you've built so far. And again, thank you for joining us. You might be on vacation, so taking time out of your vacation to join us. Thank you very much, David.
Thank you, Jim.
All right. Next up, we'll bring Paul Martin from RAND. Paul, give me 1 second and I will give you the presenter role.
Sure. Thank you first for everybody for being here and for having me.
It's our pleasure to have you. You should be able to share your screen now.
Yeah, I can.
Okay, cool.
Can everybody see the screen?
Let's see. Yes, now we can. And so whenever you're ready, Paul, please go ahead and start.
All right, let's do it. So basically, guys, the main problem that we're tackling is that Gen Z and millennials want to access Web3 yields, but they don't know how to do it in a safe and easy way. And to bring an example of this is Mark. Mark wants to invest 15 grand on DeFi because, he read and he's seen that he don't want to take the money in traditional banking anymore, and he wants to spend it or use it on DeFi. So he invests $5,000 in lending on a protocol, but he obviously don't knows what are the auditors in DeFi. So the protocol gets hacked, he loses the money. Then he tries to invest $5,000 on Uniswap to provide liquidity as a market maker. But the price of the asset goes up and he loses a percentage of the money because of impermanent loss. Then in the last try, he invests $5,000 on staking, but basically Bob didn't know that there's an unbinding period of several days for several chains. And when the price of the asset goes down, basically his money is locked and he cannot sell the asset. So basically, he needs to incur on the losses when the price goes down. So our solution basically is to bring a very simple platform that can bring the upside of Web3 without all the beginner mistakes. And basically where we can bring a very unified solution on allowing our users basically to earn 5% APY on their savings and weekly cash prices. Basically, this would be an example of our earn account, which with this guy could deposit $5,000, earn 5% APY, and at the end of the year, use all the savings, so 250 that year to spend on Spotify, Amazon Prime, or Movistar, or whatever that this person wants to spend it or keep it. And then basically, we have a team of deep expertise in trading and basically quant that been operating since 2018. And our operations are breaking down in basis trading, margin lending, delta neutral liquidity providing, and delta neutral staking. All of them, what they have in common is that they are liquid strategies and that basically are market neutral. So we are not taking any directional strategy away at any point, which it means that we do not care about prices, we care about volumes. And what we solve basically is no impermanent loss for providing liquidity on decentralized exchanges, no liquidity to unaudited protocols, no sloshing while staking, and no loss for the devaluation of the US dollar, which mainly, if you don't know, cryptocurrency markets mainly are based on US dollar currencies. And that's it. It was longer, but I didn't know there was 2 minutes. So that's it, guys.
No, awesome. You did a great job, Paul. So thank you so much. And under time as well.
Sure.
We'll go ahead and we'll open up for questions from the media panel. Anybody have a question for Paul? Tanya, please go ahead.
Yeah, hey, Paul. So my question is, obviously, there is a lot of stuff happening in the crypto space and the trading, investment, and Web3.
Yep.
What's your differentiation of your proposition? What's your unique, USP, and how do you plan to stand out in the market?
We do delta neutral. We don't do borrowing markets, so we don't borrow to other users uncollateralized loans. We do everything we do. It's strategies that are 100% liquid. So we don't do anything that we cannot unbound the money relatively fast, so more than 30 days. And basically, we don't take directional risk. That's the main thing.
But how do you explain that to the market? How do you get your word out? From looking at, the presentation looks nice, but it looks like lots and lots of other apps in the space. Yeah.
So the main thing basically is to provide a secure place of savings. We do believe that the savings market is very, very big. And we basically, the main point is that allowing that person to access the same DeFi protocols that he can access, but in a delta neutral way, which is basically that if the prices of the assets go down, he will not get, or she will not get impacted by that. And we do this basically by creating hedges position, which basically is creating short positions on futures on every single asset we buy.
Layla, please.
I don't know where your tool is located or who it's meant to target, but I have 2 concerns about this, and maybe I'm not understanding it correctly. But my first question is, what is the on-ramp for the fiat? Where's the fiat on-ramp into the digital space for the customer that's coming in?
We are incorporated and regulated, and we have licensed as an exchange and custodian on the Bank of Spain. And we basically provide a card on ramp, and now we'll provide a direct transfer bank to their accounts.
And who's doing the hedging strategies?
Our team.
And who is that team? Do they have a background? Are they
Yeah.
Who can we know? Do you have a presentation of?
Yeah, I don't have an exact presentation.
That would be the biggest part of the business model, right? If you're doing a hedging strategy, the team has to be the people that are at the front of that. And we have to see who they are, what their background is, how many years they've been on Wall Street, or hedging strategies. Are they hedge fund managers? All these things. I think it's a great idea. On one end, it's just I'm having trouble understanding the levers behind this.
Okay. So yeah, I think that's good. We'll focus on putting more in the faces on the people on our investment team then. Also mainly, basically everything we do, it's meant to be at the beginning manually and then automated. So we don't do the typical trader thing where you see people on a desk trading stuff. We automate everything. So our team is mainly quants and then traders that been on hedge funds and funds managers and family offices. But basically we automate everything we do. So to make sure there's no, human risk at any point.
Right. Any last questions for Paul?
Yeah, I have one, Paul. I'm just curious. You were talking about how Gen Zers are looking to save. I mean, this is a kind of a simple question, but do you think Gen Zers are more saving savvy than other previous generations? Can you offer your take on this?
Yeah, sure. Based on data, Gen Z are the generation that have more savings compared to any millennials or previous generations. So definitely, because of we expect because of social media, because all the access, they have better financial educations that when their parents were young. So what we've seen is that basically those Gen Z have higher savings that their parents had in their previous years, and they have also more expertise in that.
That's surprising for sure. Janae, you want to go ahead?
Yeah, I'm just wondering if you disclose how many customers or what their average deposit is or how long they hold it. So how much money you're managing or just
Yeah. Totally. Like we launched in December, so we're fairly new. That's December last month. We're managing around $4 million right now, and we got our first almost the first 900 users actually not last week. Deposited users I'm talking about. Then basically, obviously, we have a lot of signups and downloads, but then basically deposit users almost getting to 1,000. And then basically our average deposit goes around 1,000.
Got it. Okay. And they're kind of, it's so early that they haven't pulled money out yet. They're sort of staying in.
Well, some people yes, some people no, but yeah, basically we have liquid operations, so it means that we allow the users to withdraw whenever they want.
Got it. Okay.
All righty, Paul. Well, congratulations on just launching and everything you've built so far. It's really cool.
Thank you.
All right, thanks for being with us. And everybody, we've come to our last presenter as well. So I wanted to give a quick shout out to the judges, really, just to say, if you could please be sure to finalize the scores at the end of this presentation so we can go ahead and announce the winners as well. That'd be fantastic. And it looks like everybody's scoring along. So thank you, judges, for doing that. We're going to bring up our last presenter today, Carlos Lopez, CEO of Moyo AI. Carlos, give me 1 second and I'll pass you the presenter role.
Sure.
All right, Carlos. You should be able to share your screen if you'd like to, sir.
Okay. Okay. Okay, I think that's it.
Yeah, we can see it great. And whenever you're ready, sir, I'll start the timer.
Okay, thank you. Well, Moyo AI has been born as an alternative credit scoring solution. Basically, what we assess is the intention or the willingness to repay. Okay. We are a B2B company that helps mostly financial institutions on the credit assessment process. In the last 2 or 3 years, we've been helping also to the retail industry who sells some credit and some other companies or services that provide credit for their products or services. Okay. We mainly focus on institutions that serve to women with vulnerability factors, the underserved populations, or even unbanked population. We already evaluated more than 2 million people in the last 3 years, and we helped to improve the income of these end users, 3x the increase on their income. That means that we also help to improve their quality of life. In the last 3 years also, we had a chance to evolve and mainly listening our customers and listening the end users. And we realized that they are also looking for digital solutions to improve the onboarding process and automatize the fraud prevention processes they had in place. So we've been adding some other modules around the credit scoring solution. Right now, we are end-to-end solutions for credit origination. So as you can see, we're not only a credit score solution, but we also are a digital KYC solution. We validate identification, we do facial recognitions, and we have monitors to prevent fraud. Yeah, and I think that's it. I think I'm on time, right, Jim?
Just on time. That's right. Thank you so much, Carlos, for the presentation as well. We'll go ahead and we'll open up for any questions from the media panel. Tanya, please go ahead.
Yes, sorry, I'm not sure. Was there supposed to be a pitch deck? Because I could only see the first slide.
Oh, that's weird.
Yeah.
I saw one come through.
Okay, so that was me. Sorry, in that case, I'm lowering my hand because, sorry.
Oh, good, no worries. Any other questions for Carlos? Carlos,
Actually,
right?
to me,
Oh, yeah, go ahead.
it happened the same to me. I could only see one slide. But I would like to ask Carlos, what are the most challenging things you were talking about women, right? Getting loans or credits. Can you talk a little bit more about that?
Well, the challenge is that financial institutions are not yet ready to provide services in a mass manner to people with disadvantages, like underserved for a bank or people with vulnerability factors. We understand this because that is their business and they need to earn money and create income for them, right? And however, this segment, we discovered that they are good payers. So we're talking to them, convince them that they need to get into the market and take advantage of this opportunity. And right now we're working with 8 customers, 8 financial institutions, and with the credit score solution, we help them to reduce the default portfolio, in some cases in Bolivia, from 20% to 5.2% in 18 months. So we are a company that it is evolving and showing the results to our customers and the future customers as well. So the main challenge is that.
Thanks, Stefano, for a question. Janae and then Maria.
Carlos, I wanted to understand which markets your service operates in, so which countries, and then also how do you do credit assessment different from other players in the market?
Yeah, well, we have customers in Mexico, Honduras, Guatemala, El Salvador, Colombia, Bolivia, India, and Malaysia. Okay. Our credit score solution is based on psychometrics and artificial intelligence. And as I mentioned, we assess the intention or the willingness to repay.
And how do you assess that? Sorry.
Well, this is like a survey that the people needs to take. So this is like a psychometric test, which is customized for each financial institution, depending on the segment that they want to work with. and the specific product that they have. The questions are not the regular ones that we usually see in psychometric solutions, but they are questions more related to the daily activity that the people has in that specific segment. Okay. So it's a survey.
Maria and then Tanya.
So I guess you kind of answered my question previously, but I just want to dive a little bit deeper into it because you mentioned that you also serve those unbanked population. And I guess to me, it's not quite clear yet, how can you score their credit? You know, maybe just dive a little bit deeper into that, explain a little bit more. Not so sure I'm clear with that.
Yeah, well, our credit scoring solution, as any other alternative credit scoring solution, is an additional tool for companies to take the decisions if they are going to grant or not the loan, right? Understanding that we are an additional solution, okay, we assess intention or the willingness to repay. Okay, so we are another parameter on their metrics to evaluate if the person is creditworthiness. In the case that the person doesn't have a regular or a traditional credit score, then in those cases we replace that part and we assess the intention or the willingness to repay, independently from the payment capacity and some other points that usually financial institutions evaluate.
So you mentioned it's also based on their daily activities, right? So how do you go about that? Just maybe an example, and I would stop asking this question.
Yes, for instance, here in Mexico City, I can ask someone if they saw a metro ticket on the ground, what will be their reactions about it? Either give it back to the person that left it there, to the police, or other options, right? But for instance, if I do this in Cali, in Colombia, in Cali there's no metro, right? So asking them about these questions would be useless for me. It won't help me to evaluate what I want to evaluate. So probably the question will be different. We have another customer that provide credits to university students that are students from the two more expensive universities here in Mexico, which are out from the city. So the metro doesn't get there, right? If I ask the question to them, also that will be useless for me. And probably I will ask them, hey, you got a flat tire. What will you do? Are you going to call the insurance? Are you going to change it by yourself? Are you going to call your friends or your family to help you to change the flat tire? So we customize this depending on the segment that the company is going to work with and the specific product. Offering a product for productive credit, health credit, education credit is completely different for a consumer credit. And that's how we customize this solution for each company.
Gotcha. Carlos, I want to be a little bit conscious of the time. Tanya and then Leila for two quick questions.
Thank you. How do you make money? What's your business model?
Well, this is a B2B company, so we offer these solutions to financial institutions. And this is also a SaaS solution. We charge an implementation cost and then an annual fee for a certain number of transactions. And if they exceed these transactions, we charge monthly any excess that they have during the month.
Thank you. And Leila.
Carlos, the questions asked, they seem like trying to gauge behavioral outcomes. Where do you get these questions from? What data are these questions based on? Is there a psychology behind this? I mean, because it's kind of like, I'm familiar with this type of question asking, but it's a very like dangerous road to go down because it sometimes leads to like an maybe an outcome or a conclusion on someone's character that isn't always linked to that. So where are these questions coming from?
Well, the team, the other founder, Yogesh, he's a psychologist. Yes, he's a psychologist, and we have a team of psychologists on the team. The whole experience behind this regarding psychology comes from him and their team. And he has been doing this before with Tala and Tala Capital in India. And we've been doing this since 2020 in a digital way, bringing these solutions to more companies. Since we tested and we proved that this can help to reduce the default and financial institutions.
So Carlos, I think, yeah, definitely maybe talking a little bit about the methodology within the pitch as well could help going forward as well. But congratulations, great pitch. Thank you very much for going last as well. It's not easy to go last either, so we really appreciate having you here, Carlos. We've come to the end, folks. We're going to take just 30 seconds here or so to finalize the scores. So judges, if you wanted to make any last minute changes, if you could please do so, and then Bianca will send me the scores and we'll announce our winners. Also, I wanted to take this time, if anybody in the audience or any of the panelists would like to ask any questions of the media judges, this is a really good time to do so now. I kind of want to start it off with a question, and maybe this would be more directed to Janae, Leila, and potentially Tanya as well, who do cover fintech quite extensively. I'm wondering, kind of with all the fallout from FTX and crypto, etc. right now, how has that changed how you cover a startup company, and what resources are available? I think in the media industry and in general is kind of short on resources, but what resources are available to you guys at your publications to really do kind of a deep dive into figuring out the legitimacy of these startups, their financials, that sort of thing, when you're looking about covering them? And I'm not sure if Leila, Tanya, or anybody else wants to start.
I can go. There's a few, there's no short answer and there's no simple answer to this, but there's a few venture capitalist firms that have been around for a while that have been successfully able to build sort of a portfolio of unicorn companies, and sometimes they're a good source to look at. Although even with that being said, we know that FTX was able to get into a lot of those portfolios as well. And so there's no black and white answer to this. I think with the recent banking collapses as well that we've seen, specifically Silvergate, I think the issue and the problem of volatility of this sector goes way deeper than the asset class itself. And it actually goes into the question of traditional financial markets and how we're going to look at them moving forward, considering we have now technology forward industries that maybe the old system can't keep up with at this point. So it's we're pioneering the coverage right now. I wish I can give you like a clean answer, but that's the best.
For sure. Janae, on Crunchbase's side, that often covers startups and funding, etc. Was there any change in how you guys decided to cover a more early stage startup that might not have that kind of backing from a large VC, or in terms of in the fintech or in the crypto space?
Yeah, I think broadly it's very difficult for journalists because you're not seeing the balance sheets, you're not often being told revenue. And we're in a situation where even the investors don't seem to have a very clear picture. So I think due diligence is I think it's very hard for us as journalists to really uncover what's going on behind the scenes. I think one thing, in my approach that when I look at this is, if you're an early stage startup, you've raised, in the millions or hundreds of thousands of dollars, you're risky. You're going out there, you're building something new. And so it's a very different lens to a much larger startup, which has raised hundreds of millions. I think that's sort of balance. So I think covering early stage startups is just very different to these bigger companies, and likewise for investors. And, it does raise the question, where was the due diligence when you're putting hundreds of millions of dollars to work? For a big fund, it might not be a big capital risk, but it is a huge reputational risk when you're putting so much money into a company and not understanding. So,
Right.
so I'm not sure that answers it. I just think it's very difficult to do.
Right. Okay. Founders, any particular questions for the media as well? I'm curious as well if anybody's at a point right now where they're reaching out to media for media coverage, or have any questions about potentially doing that. Paul, it seems you guys are very, very early stage, so I'm not sure if you've thought about doing that yet. David, of course, you're a little bit further along, so if anybody has any questions or wants to talk about that process that they've had so far, would love to hear it too.
Yes, I like mainly what I wanted to say, that maybe I believe that you will have a clear answer. It's that in a lot of media like TechCrunch and this kind of news, like a lot of news are focused into funding rounds, as you have already said. And sometimes I'm missing to have like the view or the point of view or some key opinion leaders of the financial industry that are like people trying to change the world, no? And I'm missing this. And for example, like Say said, like this happens a lot offline, no? Like now, right now in Costa Rica, that Jack Dorsey's organizing like kind of retreats here. Like in some weeks, like Vitalik is organizing in Montenegro the same to talk about the future of finance. And each month or each 2 months, these kind of things happen offline. But for me, it's difficult to find it online. I only see kind of, okay, this company has raised this amount, and this is what they are doing. And maybe, I don't know if you can explain me a little bit, or if you are trying to go into this direction or no, it's something that doesn't work or whatever. Thank you so much.
Yeah, no, for sure. I just wanted to make sure we got the question correct for the panel. Are you speaking kind of more along the lines of why isn't there coverage of kind of the thought leadership or the people that are talking about where the industry is heading versus like the traction that companies within the industry are getting now, be that funding or whatever it may be in terms of announcements? Is that kind of where you're positioning the question?
Yeah, like it's more about instead of what has happened right now about funding rounds, it's like what is the future and what is the people that it's like leading this future thinks about what is happening.
Yeah, anybody want to field that one for David? All right.
Maybe if you reframe the question for us, maybe again in a different sort of frame way, so that I'm not sure I understood.
Yeah, like that mainly what I read in a lot of news, like or press releases, like even Insider, like in TechCrunch, in the most popular ones, like are very focused into like funding rounds, announcing funding rounds, and like the topic spins around this topic, no? And sometimes maybe it's that I don't find it correctly or whatever, like I'm missing to have like really inspiring stories about like not things that has already been built, but what is where is the future looking, or how it would be the future of finance, no? And it's things that I find a lot offline, no, in this kind of retreats, conference or whatever, but I would love to know what these key opinion leaders are thinking or doing when I'm not able to be present in this kind of offline meetings.
So you're saying more coverage of these types of meetings that are happening with these thought leaders?
Yes, like more like not only the meetings, but like what is these people thinking about the future instead of focusing on funding rounds, like of what have just happened like last month, or this company had raised 20 million and is doing this.
Yeah, I think it could be the way that certain media outlets are broken up. Like we have separate beats, and a lot of those beats, especially in the business sector or, fintech or investing, they're very technical based. And so we focus a lot on the technicals because that's kind of the type of audience that when they come, they're looking for that type of information. I understand what you're saying. I think you're probably looking for like the more humanistic, more human angle of everything.
Yes.
And I know that Insider does cover it, but I think it's more coverage on like it's not maybe in the technical side of our coverage, it's more in the news side rather than, the market side, for example. So it's a different division. And I know that we have covered it. It's just not, our teams and whatnot. So sometimes it's just a matter of just a quick Google search and then the media outlet's name, and you'd be surprised you might actually find, that article.
Makes a lot of sense. Thank you.
And Tanya, maybe if you wanted to add to that.
Sure, just to echo the sentiment, it all depends sort of the news coverage where the journalists are trying to put out the stories about what happened or what is happening is very different to opinion pieces and byline pieces or interviews, which take longer to write or just take longer to create. And they're usually sitting, quite often different publications have different focus. Sometimes they have both. But so they're like different verticals with different people responsible for it. And quite a few of them probably just focus on getting the news out to you quickly, as opposed to longer opinion pieces. But both exist. I mean, honestly, it's just a matter of probably searching and finding and bookmarking your favorites.
Definitely.
Perfect. Thank you so much.
And really quickly, David, just to kind of piggyback on that from kind of a PR perspective as well. I think there are a number of publications. Well, first of all, like, for example, like a Poets and Quants publication that really kind of goes into the weeds about the future of finance. I would say on the, on the technology, artificial intelligence side, like a Hacker Noon, those are both kind of publications that have the ability to contribute. TechCrunch also, TechCrunch, ExtraCrunch, Crunchbase News as well, I believe also allows for opinion pieces for thought leaders as well. So in terms of like the things that you're hearing about and seeing at these retreats as well, I think there's an opportunity for you and your colleagues that are at those retreats to use those publications as well to get kind of those ideas out there. And you can always pitch an editor there and author an article in your name as well to kind of get those futuristic thoughts out there ahead of the game.
I'll just say one thing. Insider today had a live event, which I was also hosting one of the panels. It's called Finance Meets Its Future. You just Google it, Finance Meets Its Future. Insider, it's a video panel, and it was thought leaders from JP Morgan, Morgan Stanley, Amber Data, crypto-based banks that are all coming together. I think it was 4 panels, and they're all talking about the future of this digital world we're entering, and it's all leaders from the financial world and the technology world. So you just give that a Google. It aired today at 12 o'clock, but you can rewatch it if that's helpful.
Amazing.
Amazing.
Awesome.
And it's free. It's not behind a paywall.
Cool.
Amazing. I did see one person with their hand up. I'm not sure if there was one more question before we move on and announce the winners.
I just have one super fast.
Yeah, go ahead, Daniel.
I would like to know how relevant is for you like Latin America as a region in terms of the news. Just
question. Anybody want to take that first?
For who? Yeah, I'll let Tanya go.
Sorry, just very quickly. So we are a global fintech publication, and we cover markets from all over the place, including Latin America. What we encounter in Latin America quite often is the language barrier. And there is obviously so much Spanish speaking publications in the world that doesn't necessarily translate into English speaking. And it's difficult for English speaking publications, I think, quite often to come and really make it big in Latin America for the same reason. but we love Latin America. I mean, there's so much exciting stuff going on there, right? It's one of the most fun emerging markets in the fintech space because there is so much technology and financial inclusion and leapfrogging from like nothing to everything.
Thank you. Yeah, just a quick comment. At least for us, like the reputation and all the trust in the model, at least in our case, we're collecting all like personal data from our users. So it's relevant for us, like all this reputation from the press. So
Fantastic, Daniel. No, well, being based in Colombia as well, we're big champions of Latin America too. So we're really happy to see startups from the region, you, Carlos, etc., here as well. And Tanya, you mentioned it being of interest to you guys too. So thank you so much for keeping an eye on it. All right, well, I don't want to take up too much time. First of all, Leila, thank you so much. She passed over the event here. I'm going to copy that so that also all the attendees can see it as well.
Yeah, I don't know if, I think it might be the live link, but so I don't know if it's going to take you directly to the live event or not the pre-recording, but I think if you just type in Finance Meets Its Future Insider, in case that doesn't rerun, you'll be able to get that. But I highly recommend watching that because there was some really like mind-boggling comments and insights made by people that are like leading in this space from like the biggest banks in the world. So it's really cool.
Cool, awesome. Thank you so much for sharing. Yeah, David, you'll have something to watch tonight as you listen to the rainforest outside too. All right. Before I announce the winners, I'd like to invite all of the panelists to unmute and clap for anybody that is named a third, second, and first place winner. It's not easy to come up here and do this in front of an audience and much less in front of some distinguished media judges as well. So we'd love to give these guys support. I'll go ahead and announce the third place winner. We have Fabian with Bunny Money. Fabian, congratulations, sir.
Thank you. Thank you so much.
Great presentation and congrats on everything you built. All right, up next, we have Daniel from Credit Top. Daniel, congratulations. All right, Daniel, I don't know if you want to say anything, but way to represent Latin America, sir.
Yeah, thanks.
All right, and last but not least, a really impressive pitch and everything you built so far. We have, drum roll, please. We have David with Going. David, congratulations for winning Connect Fintech.
Thank you all. Thank you so much. I appreciate it.
No, it was a fantastic presentation and really interesting concept as well. So wish you the best of luck as you guys go forward. And again, for all the startups who participated today, thank you so much. It's really not easy to do it. So a big round of applause to you. Also, a special thank you to the media panel, Maria Delgado, Stefano De Marzo, Tanya Andreasen, Mark Gilman, Leila Maiden, and Janae Tier. Thank you so much for taking time out of your day today. It really means a lot to us. And we hope to host you guys as well on a future Connect event. And then I'd also like to thank my colleagues Bianca and Salome as well. They put this all together on the back end, which is a lot of organizing. So thank you very much to them. And to all the attendees that listened in as well with us, thank you for joining us. And we'll see you at the next Connect event. Everybody take care.
Thanks.
Thank you so much.
Bye.
Yeah, bye-bye.
Bye.